Good morning. Today is Friday, January 5, 2024. It is currently a few minutes before 8:30 a.m. Eastern, about an hour before the market opens, and this is a chart of the SPY, or spiders, which follows the S&P 500. And the horizontal lines are levels that have been identified as trigger points to enter trades in the E-mini futures today. These levels are calculated every morning and put on the chart before the market opens. The vertical line on the left of the chart is where the SPY closed yesterday, January 4. And after the market closes today, we'll circle back around to this chart to analyze any trades that were activated in the E-minis from today's levels. Currently, the spiders are around 466.50 in the pre-market. Okay, here we are after the market has closed for the day. 3 levels were hit and trades were taken. We'll clean up the chart and take a closer look. By 9:45 a.m., the spiders had already reacted off the 468.30 level, and they were below the level when the 9:45 a.m. candle closed. So an order was keyed in the system to sell E-mini contracts to sell them short if they were to go back up and test this level. The operating number to trigger that trade was 468.25 to be precise. They did pull back a little when they hit this after 9:45, but not enough to satisfy the base hit. And I admit, after they came down within a couple ES points, plus a tick or so in the E-minis, about these 3 minutes here, I was tempted to jump out and take a 2 or 3.5, maybe 2.5 point base hit. In the E-minis, they were a little more than halfway home and pulled away each time. It was a little subtle, but it gave me the feeling I should take a smaller scalp and be happy with it. And then the jobs report data was released at 10 a.m. and that jolted the market. I should have been aware of that data release, but I was not thinking about it. So I rode this trade up out of the money and played by the rules and sold again when the spiders touched 469.70. And the average entry price provided a new fumble threshold. And after some time, there was a signal to reverse, and that represented about a 4.5 ES point loss given back to the market, where the E-minis were at that point in time at the reversal. The reversal did produce a base hit when it went the other direction on the combined position and washed out most of the points that were lost in the fumble. So while I did see some 4-digit unrealized losses today, by the time I got the base hit on the reversal, I was only out a few $100s at this point. So these levels at the 469.70, 468.25 were off the table now, at least in my book. And when the spiders came back down into 467.29, this level was still valid, even though the spiders hit it prior to the 9:45 a.m. The sell-off in the spiders for these 2 hours or so was the original design of the first 2 levels, by the way. So it's a little frustrating to see the market do the thing after the fact, but sometimes you just get on the wrong side of a level. It happens. The levels are still important, though, as you can see throughout the day, where they reacted off of them throughout the day. The spiders continued lower into this 467.29, which with the 5-cent buffer is 467.34. And a resting order was in the system to buy E-mini contracts as the spiders are coming down. I did this a few minutes prior, but look what happened. The spiders found a low of 467.36, just 2 pennies from activating the trade in the ES. They pulled away quickly. So basically, this was the trade. The pullback was more than enough to give a base hit. So I canceled this limit order here because the first time is the best time. They ended up bouncing again twice, but I don't take chances at the second hits. So this level was a no trade for me per the rules of the strategy that I use. Again, a little frustrating to get so close with no trigger, but it was just one of those days. So this level was off the table for me. And toward the end of the day, they got close to 466.31 with the 5-cent buffer applied, but pulled away before they got to it. I'm just leaving it here just to show how important this level is. I was only interested in buying at this level if they got to it before 3:30 p.m. and it was getting close to that line in the sand for me anyway. But in any case, it never got there. So it's just a no trade, just showing this level. Because it's pretty important, this area must have been important because they reacted off of this zone. So we'll look at how all this back and forth translated into money today. The first 2 trades activated were the shorts in the E-minis, and both of these trades were averaged in when they went up from 468.30 to 469.75. The reversal happened when the E-minis were out of the money, around 4.5 points on the combined position, and then the base hit on the reversal washed out most of that loss, as we talked about. And the 469.29 was a no trade because of the near miss. I can just show you the notes here only 2 pennies. So there you have it. Kind of a lackluster week for sure, but there will be some blockbuster weeks in the future. There always are. And that's it for today. I hope you found this information interesting and helpful. Have a great day.